So hello friends, if you are an NRI and you are planning to sell property in India, then this video is must watch, because in this video I am going to tell you end-to-end complete guidance on how to sell property in India, including the procedure to get lower TDS for the year 2024. Now I already have made videos on that, but every year we get slightly more smarter, or maybe the procedure gets slightly changed. So we generally update what is the latest procedure to get lower TDS for NRIs who are planning to sell property in India, including I will also guide you, if you are first time property seller, how you should go to sell your property in hassle free manner and avoid any kind of hiccups or maybe problems. So let's begin. So hello friends, my name is C. Arun Tiwari, and in this video I am going to tell you the complete guide on selling property in India by NRIs. Now first thing first, when it comes to your mind that you want to sell a property and you are sure about it, then first thing you have to do, you have to approach a chartered accountant like us, a firm where you can discuss the first important part is how much tax you are going to pay when you're going to sell this property, because this is very important and that should be the first thing you should be asking, not the last thing. Now why it is important? Because if any NRI is selling property in India, he has to pay a TDS of 23% or actual TDS. Actual TDS is only allowed when he is filing an application for lower TDS with income tax, right? This should be planned early, not when you found a buyer, not when you already signed an agreement, because at that point you will not have enough time to file a lower TDS and a big part of your money will stuck as TDS. So when you are approaching chartered accountant, then first thing you should provide them is the purchase cost, how much you bought this property, and if this property is bought before 2000, then better you get a valuation report from a authorized valuer. Now these valuer are registered with income tax and they can provide you what is the cost of that property going to be in today's scenario. So in that case you will get a better purchase cost, that means your tax will be lower. So always remember, if the property is bought after 2000, you have only one option, whatever the purchase cost multiplied by index value, that will be your purchase cost as on today. That purchase cost you have to reduce from the possible sell value, whatever you are expecting, right? That sell value, if you reduce, you will get a capital gain or net profit. So that on net profit you have to generally pay a tax at the rate of 20% plus surcharge plus education cess. So it comes approximately around 23%, right? But understand, that is your actual tax. But if you don't apply for lower TDS, then this 23% you have to pay on total sale value. For example, your property you're planning to sell at say 1 CR, so 23 lakh you have to pay as a TDS. While suppose your actual tax is say 8 lakh rupees, then you will only pay 8 lakh rupees, but you have to get a lower TDS certificate for 8 lakh by applying to income tax in advance. So as I told you, the first step is to find out what is your tax rate. If your tax rate is anything below 15% of your total sale value, for example, total sale value is say 1 crore and your tax is coming 15 lakhs or less. If it is 15 lakh or less, always go for lower TDS. If it's more than 15 lakhs up to 20 lakh, it's your option. You can go to lower TDS, you can avoid it also. Or if it is more than 20 lakh, there is no point going for lower TDS, because already you are paying almost similar to highest possible tax rate. Now after getting an idea that how much tax you will end up paying, you can plan either to pay taxes and take money abroad, or you can plan to reinvest that money in India so that you can save your taxes. So always you have these two options. Now understand, this investment for saving taxes by investing only available if you are holding a property for a long term, for more than 2 years. If you are selling a property less than 2 years, this tax saving part will not be available to you. So this is step number 1. You have to find a chartered accountant and you have to get your taxes recalculated. You also have to find out all your documents, for example your sale deed, related documents, stamp duty paid, if you have paid any commission at the time buying property, that you have to also provide a bill. If you have done any substantial modification, for example you build another floor on that house or something like that, all cost if you can bring it, this will reduce your tax outgo. So that takes time, so better you plan in advance and you collect all these documents front end instead of running around when you are actually already you got a buyer and buyer in hurry, and that way basically you will end up paying more taxes. Second step after that is you can apply for PAN transfer. So generally what happens for lower TDS, your PAN should be in international jurisdiction. That means in income tax records you should be showing as a NRI taxpayer. What happens in most of cases, people leave India and after that they forget to file their returns, and still in income tax records their status is a resident taxpayer, and to get this converted into non-resident it takes almost 15 days. So before you find a buyer, it's always better to you apply for your PAN transfer to international jurisdiction, because the lower TDS only can be issued by international jurisdiction. That's part B. A part is done by us itself in the services we provide for lower TDS. So we have end-to-end package for that, where from filing an application for PAN transfer to getting the refund, everything is covered that there itself. So you can just contact and you can know about this packages. Now third procedure after that is finding a buyer. Of course, once you find a buyer, what is the procedure followed? That let me tell you. So the first procedure, generally when buyer is interested, he will give you a token money, maybe 50,000, 1 lakh rupees. Try to get this money as less as possible. It will give you two benefits. Benefit number one, if the amount is less, you will end up paying less TDS. Now understand, the lower TDS benefit only apply from the date you apply for lower TDS. For example, suppose you can apply for lower TDS only once you finalize a buyer, right? Not before. So whatever money you receive as a token money, you have to pay 23% tax on that amount. So if you accept a bigger amount as a token money, you have to pay 23% on that amount. For example, you got a 5 lakh rupees token money. So that means you have to pay 23% on 5 lakh rupees. So better keep a small amount, it will save your taxes later. Second, getting out of sticky situation will be easier if the token amount is small, right? So always try to get a small token amount. This way you will have in ultimate control, and if suppose you feel the buyer is not serious or he doesn't have fund, anytime you can just return the money and you can get out of situation. So after accepting the token money, there will be a document signed which is called MOU, Memorandum of Understanding, where both buyer and seller will agree on initial terms of sale. So this is not a legal document, this is not legally enforceable, this is between buyer and seller, just to put the things which has been discussed on paper, so that later on nobody has any confusion. So there in MOU, generally it's 100 rupees stamp paper you can sign, and there is mentioned what is the sale price fixed, what is the number of days buyer will be able to pay the whole amount, right? When the seller will be able to give the hand over the property, all these things. This is generally 1 or 2 page simple agreement, not very complicated. After signing this MOU, seller will give one copy of their sale agreement. Now this sale agreement buyer will take to their bank, and bank will do the due diligence to find out whether they can fund that property, if there is any charges or any loan. So all the background check will be done by either buyer's lawyer or buyer's bank. After doing the due diligence, they will tell the buyer that okay, this property is fine and we can fund it. Now once buyer will get a go ahead, he will come back to you again saying that okay, fine, my bank has checked or my lawyer has checked and everything seems fine, let's move ahead. Now here buyer has to get a TAN number. So TAN number is different than PAN number. PAN number is basically the permanent account number. TAN number basically used only for this purpose, only for lower TDS application. So buyer has to just provide us his PAN number and Aadhaar card number, and will apply for TAN number. This TAN number generally takes 5 to 7 days to come, right? In between you can sign first agreement of sale, which is called agreement of sale. So it's an agreement of sale, or somebody call it first agreement, whatever way you call it, first agreement or agreement to sell. In this agreement of sale, we generally there is mentioned the terms of sale, what the property details, the payment details, okay, what will be the schedule of payment, how much time we are buyer going to take. This everything will mention in detail. So this is going to be a big agreement properly drafted by buyer's lawyer. So seller don't have to engage any lawyer, buyer will engage his lawyer. He will draft up agreement to sell, and he will send you the soft copy, which you can check if there will be any like terms and condition where you feel this is sticky or this can create a problem. You can request them to change that. So after that, buyer and seller both are okay with format of agreement to sell. It can be signed, and before you go for first registration with the registrar, buyer generally pays you, the seller, 20% or whatever his contribution are there. For example, if he is just paying 20 or 30% of total sale value, before you go for registration of first agreement, he will pay you that amount, and soon after that buyer and seller will go to registrar to register the agreement to sell. This agreement to sell is a place where buyer pays the stamp duty, and once this agreement is registered, this is a legally binding agreement, and generally both of you cannot avoid it very easily until there is a serious reason to avoid it. For example, buyer is not paying money on time or seller has some other issues. In that case it can be cancelled, but otherwise once the agreement to sell is signed, deal is almost 80-90% done. Now only thing is pending from buyer side, that buyer has to arrange the balance amount, whatever he has to pay either through a bank loan or from other sources, and then from seller side, seller has to ensure that once the total amount is paid to him, he will hand over the property peacefully. The possession of property will be handed over to buyer, and after that generally one more documents are signed, which is called sale deed. So sale deed is a conclusive document where buyer will say that I have paid all the money, and seller will say that I have given the peaceful possession to the buyer. Now in between, generally once the first agreement, that is called agreement to sell, is signed and registered, this registered copy will go to buyer, and buyer will submit this copy to his bank. His bank will analyze all these legal document and they will prepare to disburse the final amount, whatever the balance amount. But before he disburse this final amount, he will ask buyer to pay the TDS. Now this is the most important part for seller. Now if you already have got the lower TDS, you will give a lower TDS certificate to buyer, and whatever percentage is mentioned there, buyer will only retain that much amount, and balance amount will be paid by bank directly to seller's NRO account. Now very important to understand, the money will only come to NRO account. So if as a seller you don't have any NRO account, before you sell the property, you just ensure that you open a NRO account or you convert your existing saving account as a NRO account by writing a letter to bank. So hope so far is okay. So this is the procedure. Basically once you got the lower TDS certificate, you hand over to buyer. Suppose in lower TDS the certificate, the TDS rate is mentioned say 5% and total property value is say 1 crore. So the buyer will retain this 5%. He will pay that 5% to government account, where they will get a challan, and he will give you challan also, and the balance amount, whatever amount he has to pay you, either as from the bank or from his own sources, he will pay it to you, and then after that you will hand over him the possession, and then both of you will go to sign the final document, which is called sale deed. Once sale deed is signed, the whole procedure of selling property in India is over. Now seller has to do further some activities, which is basically to file income tax return in next year. So when he is going to file the income tax return, now understand this part. Generally most of seller, they think that whatever TDS paid is a gone money, it is a cost. No, it's an advance tax, it's not a final tax. So if you have paid more tax at the time of selling property, you can claim refund by filing income tax return next year. So one thing you understand, once you've sold the property, you have obligation to file return in that year. Whether you have filed return earlier or not, that doesn't have any problem, doesn't have any issue. But that year, like next year, you have to file your income tax return. If you have paid extra tax, you will get as a refund. If you don't have, if you paid short, like maybe the actual tax may be more or something else, then you have to pay extra tax at the time of filing return. But filing return is mandatory. You cannot forget, you cannot avoid it, right? Now here is a catch. Generally people say, if it's a advance tax and anyhow I am going to get this money, what is the importance of lower TDS? Why I have to get into that nitty gritty? Now this is the question here, and I will make a video on same. If you have applied for lower TDS, your actual tax is your tax payable. So as a TDS, you have only paid whatever actual tax you should pay. So that refund part will not come, right? In most of the cases, you don't have to bother about refund because already you have paid whatever taxes you have paid. But if you have not applied for lower TDS, then 23% of total sale value, not net profit, total sale value will be paid to the government. You will file return next year. and you will get refund maybe next to next year. So generally, if I say at least 10 to 12 months or maybe 18 months also it takes to get the money back. Remember, bigger the refund amount, there will be bigger delays because it has to be approved by senior income tax officers, and there is a chain of approval they have to take if the refund amount is big. Now, there is another case coming on nowadays. I will definitely talk about that. That is what happened what if you have some demand already pending in your income tax portal, maybe 10 years back or 20 years back. What happens to that? In that case, there is a chance that your refund will be stuck. Even the demand will be 1 lakh or 2 lakh rupees, your demand may be stuck because then first you have to pay that demand, settle that, then only income tax will consider your request to pay your refund. Now, a new tactics has also been deployed by income tax department. Once you get the bigger refund in your account, out of somewhere maybe 5 year, 10 year back, they will go and they will automatically raise some demand and they will adjust that demand against your refund. And because it's very old demand, most of time people don't have documents, so there is no way of fighting that. So it's always better your money should remain in your hand. That's why I told you in starting, the very first step is to ensure that you get all the documents and you get a calculation in hand that how much tax you have to pay. Now, last thing I will say before I close this video, what if you are planning to invest money? Can you claim the whole refund or part of refund? How is that? So suppose you are planning to reinvest, maybe you want to buy a bigger house, maybe you want to buy some other assets, or maybe you want to buy bonds. So generally, two viable ways to avoid taxes is either you buying a bigger house or you are buying a bond. If you, in case you are buying a bond, total bond in a year you can buy is worth 50 lakhs. So if you buy 50 lakh rupees of bond, right? So proportionately that much tax you can save. So in that case, proportionate tax will be saved and that much amount you will receive as a refund. But what if you totally save, like reinvesting in bigger house or bigger property, then you can claim your whole tax paid as a refund. That's also available. So generally it doesn't happen. Most of cases I have seen that NRIs, when they sell property, they are planning to take money abroad. So in that case, of course, you have to pay taxes, whatever taxes is there. And then there is a 15 CACB, you have to get it from us or from a chartered accountant. You have to submit that 15 CACB to your bank, and your bank will transfer your money from your NRO account to either NRI account or your foreign account directly as well. So this will be the whole procedure of selling property in India. Now it might be sounding daunting because it's so many procedure, but there is very easier way. You can simply contact us. We have whole package for that, and end to end we can provide support to you without involving yourself or your time. Of course, the documentation part you have to collect because you know where is your documents and what are the documents you have. Apart from that, the procedure, the pen transfer, the filing of return, the following for refund, everything we are going to follow end to end without much involvement of you. So it really going to be true hassle free for you. Apart from that, in case suppose you want us our advice on the agreement to sell, you just want us to review, we can review it also. You want to see that whether there is any pending demand, we can review that also. So we'll ensure that nothing stuck in between of your refund money and you. So your refund goes properly processed without any hiccups. So all these things we can offer as a services to you. So if you have any plan to selling property, either maybe coming 6 months or 1 year, I will advise take this time and plan this in advance, at least 45 to 60 days in advance, because it takes that much time to get the lower TDS. And always try to apply for lower TDS. In case you are very hurry or something else, then of course you can get the 23% deducted and then file for refund. But always your first priority should be to get the lower TDS and then only proceed for selling property. So that's all, friends. I think video has been slightly stretched, but I want to give you a complete idea that in 2024 how an NRI can sell property, save taxes and avoid all this refund struggle by just following a simple stepwise approach, or even simpler by just getting a services from us. That's all in this video. If you have any query on selling property, please reach out to me or my team. Either me or my team will reply you. That's all in this video. Thank you. Have a nice day.